What's up, guys? Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals going over the S&P 500 and the NASDAQ 100, but also breaking down from a technical standpoint for stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had a red day all across the board. Small cap stocks got absolutely killed today, and therefore the Russell 2000 was the worst performing sector out of the bunch, going down 1.15%. NASDAQ went down 0.57%. Dow Jones went down 0.20%, and the S&P 500 went down 0.13%. And when it comes to the S&P 500, guys, the most important index of the US, what happened today? Well, this index went down because basically, guys, the two most important sectors that trade inside the S&P went down. I am talking about financials, which went down today 0.28%, and the tech sector, it was due for a pullback because I told you, if you guys remember in yesterday's video, I told you that most of the big tech stocks were in an overbought condition. So it is good, the fact that the tech sector pulled back today. But take a look at these, guys, because I am telling you that I don't think that the S&P 500 is going to go way higher unless we start seeing a recovery in the case of the financial sector. What you guys can see on your screens is a 5-day chart of the 11 sectors that trade inside the S&P 500. And take a look at what's the worst performing. I mean, this is the second to last worst performing sector inside the S&P 500 in the last 5 days. The financial sector, this sector that, as I just said, is very important, has gone down almost 2% in the last 5 trading sessions. So the fact that the tech sector is taking a rest is fine, obviously, because this sector is a bit overextended, but we need to see the financial sector pulling up in order to go higher. And before going over the S&P 500, I want to show you a trade, another trade that I closed in a successful way in today's trading session, and that was discussed about here on the channel, and I am talking about Visa. This was one of the stocks that I broke down in one of the videos that we posted last week. So on September 2nd, I purchased 35 shares of Visa at $222.62, paying $7,791, and I closed this trade today at $228.43. I sold my 35 shares and I was paid $7,995. So I ended up making over here something like $205 or $210. But as I always told you guys, this was a base hit, but base hits put you in the Hall of Fame. And in the case of the S&P 500, this index went down today 0.13%, and it closed today's trading session at 4,514 points. So I am going to zoom in here on the 4-hour chart, and guys, despite the fact that the S&P, I think that this is the, let me pull up here, the 5-day, 5-minute. Yeah, this is the second red day in a row for the S&P 500, but we are still trading above 4,500. So the bulls are still in charge of this index. I have been telling you that as long as the bulls remain trading above 4,500, they are in absolute charge of the S&P. But take a look at what happened today. So today we saw a nice drop as soon as the trading session opened, and the bulls managed to find support at 44.93. So that implies that the lower support at 4,500 was actually broken to the downside today. And there is a coincidence over here, guys, because the overnight low in the futures of the S&P 500 was actually 44.93. So the bulls managed to find support at an area that had already acted as lower support overnight. So this is bullish behavior, no doubt about it. So let me pull up once again here the 4-hour chart, and we are still on a clear uptrend, trading above the moving averages. The RSI is at a very healthy level at 50 points, so that implies that the S&P is neither oversold nor overbought. So guys, the only way in which we are going to see a leg down in the case of the S&P 500 is if 4,500 points happens to be broken to the downside. In the meantime, and from a technical standpoint, we are seeing nothing but a process of consolidation slightly above a very important area of lower support at 4,500. And in the case of the NASDAQ 100, there's nothing wrong with the fact that the NASDAQ 100 went down today 0.35% because I told you in the video that we posted yesterday that the relative strength index of the NASDAQ 100 was getting a bit overheated. When we closed yesterday's trading session, the RSI of this index was at 73 points, and as of now, we are seeing the relative strength index of the NDX at 59 points. This is a way healthier level relative to the level that the relative strength index of the NDX was having yesterday. So we are still on a clear uptrend. We are trading above the moving averages, and the bears of the NASDAQ 100 could not even, guys, take the NASDAQ 100 down to 15,500 points when the S&P 500 was selling off today. So we are pretty much in the same situation that I told you in the video that we posted yesterday. As long as the bulls remain trading above 15,500 points, there are no reasons to short the markets, and the bulls are in charge, no doubt about it. And therefore, what we are seeing over here, and as I just said in the case of the S&P 500, is a process of consolidation slightly above a very important area of lower support at 15,500 points, period, full stop. And now let's go. And mind you guys, I'm not saying that we cannot see a leg down in the markets. That's not what I am saying. What I am saying is that as of now, we are on a clear uptrend. We are trading above the moving averages. So no one should be shorting the markets without having a technical confirmation that an important area of lower support was broken to the downside. So that's the message that I want to get across over here. All of the people that are out there buying puts and shorting the markets are simply gambling. Period. Full stop. And now let's go ahead and take a look at the earnings report of GameStop. And mind you guys, this is going to be a live reaction. I haven't seen anything. So let's see what is going on after hours in the case of GameStop. So we are seeing a bit of a drop over here. GameStop went down today 0.10%, and it closed today's trading session at $198.80. So let me pull up here the 1 day, 1 minute, and yeah, it dropped a bit, nothing crazy actually. So GameStop closed today's trading session at $198, and after hours it is trading at $191, $193. So we are seeing over here a drop of only 3%, and nothing crazy taking into account the range in which GameStop usually trades, right? We can see GameStop in one single day going up or down 10 or 20%. So a drop of 3% is pretty much nothing to be worried about. So let me pull up here the live news tab, and let's see what did GameStop report. So let me see GameStop. Okay, here we have the information of EPS. So EPS came in at a loss, obviously, because GameStop was losing money. So GameStop lost 76 cents, missing the estimate of 66 cents. So they pretty much lost more money than what the analysts were expecting, and sales came in at $1.18 billion, beating the estimate of $1.12 billion. So they beat on sales, but they missed on EPS. So we can make the case that this was a decent earnings report. It would be interesting to take a look to the guidance, but we don't have yet any information related to the guidance yet over here. on TD Ameritrade. So they missed on EPS, but they beat on sales. So what could happen tomorrow with GameStop? And now, yeah, we are seeing GameStop pretty much trading at $192. So I am going to pull up here the 10-day chart and take a look at how, guys, the bulls are trying to find support near $193. Because GameStop is trading at $191. So $193 is going to be an interesting spot tomorrow, because we are talking about a former area of lower support that already acted as such for GameStop back on August 27, but it also acted as lower support back on August 25th. So if I happen to see tomorrow, guys, GameStop starting to consolidate slightly above $193, that is going to be an interesting spot in order to pick up some shares of GameStop, in which case we could have basically two price targets. The first price target is going to be $210, which is an area. I am going to draw a red line over here. So $210 is an area of overhead resistance in which the bulls of GameStop have failed on 1, 2, 3, and 4 occasions in recent days. Or maybe if GameStop happens to have a very good day tomorrow, and who knows, guys, because this is one of the most famous meme stocks, then watch out for GameStop bursting above $210 and maybe filling the gap up to the next important area of overhead resistance near $230. If GameStop is able to make this push to the upside tomorrow, and if we happen to be able to pick up some shares of GameStop near $193, and if we sell out of those shares at $230, we could be making a profit of almost 15%, up to $230. Up to $210, we could be making a profit of 8%. So watch out tomorrow for GameStop, guys, because the earnings report was a bit decent. So if the bulls of GameStop can hold tomorrow $192 as lower support, I think that the stock of this company could be off to the races. And let me zoom in here on the 4-hour chart. And when it comes to this chart, guys, to the 4-hour, we are trading between the moving averages. So this chart is looking bullish. And yeah, as soon as the bulls of GameStop take on the 50 SMA on the 4-hour near $206, and after that, if they happen to be able to take on $210, then I think that the possibility of filling the gap up to the $230 is going to be on the table. And now let's go ahead and take a look at AMC Entertainment, which went down today 0.90%, and it closed today's trading session at $47.40. So I am going to zoom in here on the 4-hour chart, and there is not really nothing new to say, different to what I told you guys in yesterday's video. We are still respecting this uptrending channel, and we are trading above the moving averages. However, if I zoom in here on the 4-hour chart, take a look, guys, at how the bulls of GameStop were about to break to the upside in today's trading session, $49. We failed right at $49, but we are still trading above the moving averages, and this golden cross that recently unfolded is still intact. So it looks like the bulls of AMC are going to end up taking on that area of $48.50 and $49, and by doing so, they are going to fill the gap up to the next important area of overhead resistance near $52 that, as I told you in the video that we posted yesterday, is a previous area of lower support that acted as such on 1, 2, 3, 4, 5, and 6 occasions in the course of June. And if we take a look at the relative strength index on the 4-hour chart, it is at 61 points. So it looks like AMC is about to be off to the races, guys. Don't be surprised of seeing AMC filling the gap up to $52 sooner rather than later, because let me take a look over here, and yeah, AMC basically closed today's trading session inside this uptrending channel. So it is looking very bullish, guys. As I just said, we are still respecting this uptrending channel. We are trading above the moving averages, and the relative strength index is in a very healthy spot in AMC terms because it is at 60 points. And the third stock of this video is going to be Path. And the stock of this company got absolutely killed today. In the case of UiPath, this is a software company that IPO'd back in April. And during the month of May, in late May, the stock of this company reached all-time highs at $90, guys. So as of now, we find the stock of this tech company trading 38% of its highs. And I am going to pull up here the live news tab because this company reported very good earnings yesterday, guys. Let me see if I have the information handy. So take a look at this. So adjusted EPS came in at a loss of 1 cent, but beating the estimate of a loss of 5 cents. So they beat on EPS, and sales came in at $195 million, beating the estimate of $184 million. However, guys, the most positive aspect of the earnings report that Path reported yesterday was that they up-guided when it comes to the third quarter of this year. So analysts were expecting sales of the third quarter to come out or to come in at $206 million. However, the upper management of this company indicated yesterday that they are expecting sales to come in for the third quarter of this year somewhere between $207 million up to $209 million, beating the estimate, as I just said, of $206.17 million. So this was a very solid earnings report, guys. The company, Path definitely beat on expectations all across the board, and despite the fact that this company reported very solid earnings, we saw a massive drop of almost 13%, apparently for no reason. And I think that I even saw some sort of upgrade because of this earnings report. Let me see if I can see it here. So Mizuho Securities adjusts price target for UiPath to $70 from $77. Well, in this case, this was a downgrade, but $70 is actually a price that is way higher relative to the current price of UiPath. And Cohen adjusts UiPath price target to $80 from $84. We saw a couple of lower price targets in the case of UiPath. However, this company reported very solid earnings. And from a technical standpoint, guys, the main thing that catches our eyes is the relative strength index of UiPath. It is at 27 points, so the stock of this company is severely, but I mean severely, oversold. And it looks actually like a falling knife. So I don't wanna play here the hero. I don't wanna buy UiPath at $55. I need to see some sort of confirmation of a reversal of this horrible downtrend that we are seeing on the 4-hour chart. So I want to see Path bursting above $57.30. $57.30 is a previous area of lower support that already acted as such for the stock of this company back on July 16. So the second the stock of this company bursts above $57.30, I am going to be very tempted, guys, in order to pick up 40 or 50 shares of Path, in which case my price target is going to be the next important area of overhead resistance for Path at $65. $65 is a previous area of overhead resistance in which the bulls of the stock of this company failed on 1, 2, 3, 4, and 5 occasions in recent days, but we are also talking about a former area of lower support that acted as such back in the beginning of July. So if we pick up some shares of Path at, let's say, $57.70 each, and if we sell out of those shares at $65, we could be locking in a profit of almost 11%, a very solid profit. So watch out for Path, guys. I think that the stock of this company is absolutely due for a relief rally, and the second Path burst above $57.30, I am going to be definitely picking up some shares of UI Path. And the last stock of this video is going to be Fubotv, which is another stock that has had a couple of difficult days. So FUBO went down today 4.06%, and it closed today's trading session at $28.38. And guys, FUBO is approaching a very interesting spot in order to pick up some shares. $28.20. And why? Well, because $28.20 is a previous area of overhead resistance in which the bulls of FUBO failed back in late July. But we are also talking about a former area of overhead resistance in which they failed, in which the bulls of FUBO failed back in early June. But at the same time, this is an area of previous support that acted as such back in January, guys. So this is a very interesting spot in order to pick up some shares of FUBO. And mind you, if I zoom in here on the 4-hour chart, we can clearly see over here a golden cross. You guys can see the 50 SMA that crossed above the 180 SMA on the 4-hour chart, and this golden cross unfolded back on September 2nd. So this is a bullish sign that suggests, and that is actually still in place, because FUBO is trading as of now between the moving averages. It hasn't broken, despite the fact that FUBO has gone down for 3 trading sessions in a row. It is still trading above the 180 SMA on the 4-hour chart, so we can make the case that this golden cross is still intact, and it is suggesting that we are about to see a nice move to the upside in the case of FUBO. So if tomorrow, guys, I happen to see FUBO starting to consolidate or finding a good support, I'm sorry guys, near $28.20, I am going to be picking 100 or 200 shares of FUBO, and you guys know that I put my money where my mouth is, in which case my price target is going to be the next important area of overhead resistance for FUBO at $35. $35 is a previous area of overhead resistance in which the bulls of this stock failed back on June 25th, but they also failed back in mid-March. So if I were able to take this trade the way that I am describing it, picking up some shares at $28.25, $28.30, and if I can sell out of these shares, or if I can sell out of the shares that I bought at $35, I could be potentially locking in a profit of almost 18%. So watch out for Fubotv tomorrow, paying a visit to $28.20 each, finding a good support over there, and then bouncing back up. And with FUBO, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again. Peace out.